The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. The first chart that I've posted in here to Tiger TV today is the Dow Jones Transportations. Yesterday, we gapped down again, and now we're coming into the 786 retracement here. We have a full moon due on tomorrow on Wednesday. But more important than that, we have a Venus is actually at conjunction 0-degree Jupiter right now. As you recall, a few days ago, I talked about the Venus-Jupiter trine that we had going on where the two stars were so very bright next to the evening moon. And I would like to tell you the story a little bit about the history behind this is that if you remember the story of the three magi, in the Bible, the Magi were actually astrologers. They were scientists of that era. And they were told to follow the bright star. The bright star that was in the sky at that time, which was in October of 0 BC, I guess it would be 1 BC, was the triple conjunction of Venus, Mercury, and Mars. All three of them were lined up like bowling pins, and that's what made the star so very, very bright. That happened in October of that year, and that was the tax time in Jerusalem at that time. So that's why they assume that, they're pretty sure that Christ was born, sometime during the month of October and not December 25th, that the commercial interest, certainly go after. So those are some of the things that we're watching. Now, all I tried to do when I was doing this work on astrology, going back 40 years ago, 38 years ago with Dr. Miller, Dr. Ruth Miller, was I would look at these aspects in the ephemeris, and then what we would do is we would go back and check the charts to see if there was anything significant happening during those times. And since we had data going back to 1875, we had a whole lot of data. And so all we had to do is do it by hand, which we had to do, is myself and Dr. Ruth Miller and Jim Twentyman. And we come up with probabilities, and that's what you're looking at. So what you're watching now is a key cycle date that's right here. Could be today or tomorrow. Probably might have been yesterday. I don't know. But folks, this market is in big trouble. TROUBLE. I mean, it is really big trouble. I mean, when you gap down like you did, and I'll post that chart here. Well, let's just do it right now. When you look at the New York Stock Exchange Index and see a market that is gapped down like this one has, you're looking at some really serious, real serious selling. And as we've seen with the New York Stock Exchange Index, with the advanced decline line and also the new highs to new lows, all of that has been incredibly bearish. And now what it's done is it say, okay, that's basically what it is. Dr. Ruth was in economics. That was her, I think she taught economics at Indiana. 30 years, I think. I don't remember exactly. But if you take a look at this New York Stock Exchange Index, we closed right on the exact 786 of the move from March 11th. Now, March 11th is I've said many times to circle that date, because if we go below those lows, and we've certainly done that already in the Dow Jones Transportations, and we've done it already in the Dow Jones Utilities, but when we go below that level in the stock market, you're looking at one of the worst. Not one of the worst. You're going to look at the worst bear market we've ever had. The reason why I say that is because the completion of those big planets, the big patterns that were up there, the fact that the market is still pretty much complacent. Third thing is that there's a lot of new players in there that don't even know what a bear market is. And but this is going to really be nasty when we go below that March 11th. It's not a question of if, it's a question of when. If you'll notice the big gap down that we had yesterday, that is a very, very negative thing when the market is down, 2%. And when it comes in at one day like this, like it did, it tells you that you're looking at something that is quite sinister. And it has nothing to do with the euro, folks. The euro stopped exactly at the 786 on the daily charts to the exact penny at 109.50 Sunday night. It's since rallied 300 pips to the upside, then sold off another 100 pips, which that's normal for the euro. So that this thing that they're talking about is nothing to do with Greece. I think Greece is a hand signal that they're trying to say, hey, look what I'm doing over here when someone's trying to pick your pocket on the right. So that's it. Now, China had the best day since 2009. It was up 5.5%, but what the news people didn't tell you is down 22% in the last 13 days. So it's having a snapback rally, probably go to the 618 or 786 and then back down again. They got some problems over there with debt also that we've talked about several times. All of this is related to debt. I don't think it has anything to do with what they're trying to tell us about Greece. This is coming from an old technician that just trying to tell you what I see. That's basically what I'm looking at. Now, I wanted to share with you one of the charts from abroad. We're going to jump across the pond here and take a look. 1 second, please. Take a look at the DAX. Now, I put it in here and I can't find it. I hope this is it. Just a second. No, that's not it. Doggone. Well, I'll find it here in a second, and then I'll bring it up. What did I do with it? I just printed it out. Oh, I have to show you. I have to show you something that one of our funny subscribers here at TFNN forwarded on to me. Hold on 1 second here, and we'll see what. Okay. Okay. All right, you're gonna like this is a picture from Life magazine back in 1955. It shows NASA. They're working on starting on the space program, and you'll notice that the diagrams that they're showing up on the board, and this is long before computers, folks. Can you imagine? You got 6 guys there doing these equations, but if you look at them, you'll notice that they're all related to ellipses and also the triangles that we look at. So that's the kind of stuff that they use in NASA, and this is pretty much the same stuff that we use. If you notice, you'll see the A, B, C, D up there, and you'll see square roots and stuff like that, and those are some of the things that we also look. I thought that was rather funny that they sent that on to me to take a look at it. The other thing is we have a crop report today that comes in at the crop report, I believe, is oh dear, let me see the crop. Oh my goodness, I just made a bad mistake here. I just hit my icon thing, and now I'm in big trouble. Oh dear. Hold on 1 second here. I've got to change this. Oh dear. Sort view by medium icons. Okay. All right. I think I can do that anyway. All right. We'll see if that's the case. Here's the FTSE. I knew I would find it. Give me a break. Okay. This is sent to me by one of our friends over in the UK, across the pond. And you'll notice this is the FTSE, which is the UK stock market. We made that big butterfly pattern way back in early February, and now we're in the midst of making a complete type of move, parallel move like we've done before, and that brings it down another 300 points in the FTSE. But I believe we've started a major bear market here, and we would be looking at a little bit more of a bounce. Now, our friend Norm Winsky from Astro Trends sent me an email last night saying that he had a signal that came up about options calling the turn, and he said that he felt that there was a very, very strong probability of the market rallying somewhere between 1 and 3 days here, because he has a signal that came up that says every time this has happened, and he didn't have a lot of samples, but every time that it happened, I think he had 7 samples. The last one happened in 2014, that the market will rally 1 to 3 days. Now, whether that's going to be happening or not, I don't know. It makes good sense because we've been coming down really hard, and then yesterday we had the big sell-off, and it's not going to continue. At least starting at the market this morning, it's not. But if we have another day like we had yesterday, we're looking at some really serious stuff. Right now, we've got the Dow. Pre-market is up 90 points. The S&P is up about 10, and the NASDAQ is up about 25. So whether that's going to affect the market, but every time this market's opened higher, they've hammered it really good. And that is what we're really, kind of keeping an eye on. Now, the other thing that we have that's going on is that we have a crop report that comes out today at 12 o'clock Eastern time, I believe. Yeah, 12 o'clock Eastern time. No, it's 12 o'clock Central Time, 12 o'clock Central Time. And this is we're in the midst of a weather market in the grains. We've had a little bit of a sell-off. Part of that was due to what was going on in the other thing. But I've got to share with you a pattern here that if you like pattern recognition, you really have to just, buckle up and try to do it. And that's in the wheat market. We have gone up and we've completed. We're within about, to hit the exact 786 number, we need the wheat to get up about 15 cents up in that level. But at 15 cents higher in wheat, this old cowboy is going to be a seller. And the reason for that is, I'm not looking at anything fundamental. I'm not looking at anything weather related. I'm just looking at the pattern. And in wheat, if we get up another 14 cents from where we are right now, we're going to be at a 61% retracement of the high we made last year. And remember, we dropped $2 a bushel. Now we've rallied back $1.50 a bushel. We're completing all kinds of ABCD patterns up in here. So I'm going to be looking to be a seller of wheat around the 596 level, and I'll be risking about 12 cents most probably. $600 is the acceptable risk in the wheat market, but I really think we have to look at it. I'm going to have an order setting in there, and they might whack me hard, but I've been spanked before, and I'll be spanked again. So this is what I've got to do. Not only that, but the market's been up 1, 2, 3, 4, 5, 6, 7, 8 days without a lower low, and that itself makes it an outlier event. So that's what I'm looking at. The beans are having a pretty good correction. I'd like to see another 15 or 20 cents lower in the beans, and I would probably be looking to be a buyer. That might happen right after the report today, and we'll see if that will be one of the things that we'll be watching here pretty soon. So we got the Dow up almost 100 points, the S&P up 15, the NASDAQ up 23. And we're almost ready for our break here. We'll see what's going to happen. I want to cover the S&P to show you the gap that we're looking at that I think is very important. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted into Tiger TV the chart of the E-mini S&P, and as you can see, it started with the Sunday night trading. We were down 40 points, and then we ratcheted back all morning long, and then the market opened with a little bit of a burst, and then it gave up, quite a bit. Now, that might happen again today. I'm not sure. All I can tell you, folks, is that long-term charts have turned negative big time. I've been saying that for a bit. I think now it's correct, but we'll have to, wait and see if that's going to be the case or not. If they start a big bull market from right here, I'm going to have to send in my subscription to the Market Technicians Association, but I don't belong to them, so that won't make any difference, I suppose. So we'll just have to, wait and see. But this market has really bearish undertones with the all the things we've talked about before. You don't have to go over them. Very few people see it. Even with the big down day yesterday, there was no fear in the market at all. We had the VIX index, finally raised its head and moved up quite a bit. We'll take a quick look at that. I'm anxious to listen to hear what Basil has to say about it this morning. But we had a big run up and, just a really wide range and everything. But really, this was really the first time we popped. We did leave a gap above the last week's highs, and that could be a tremendous bullish impetus to it as we pull back into that gap. That would set up that situation of the 20-minute line where you would have a market come back and test the gap area. I'll put that in here and let you take a look at it. But that would be a real interesting one if we do get that. It's just, just an overall bearish chart pattern. When you get the Dow down 370 points, now we're back, we're bouncing back a little bit. Looks like we're going to do at least a 382 retracement of yesterday's range, if not more. We'll have to wait and see if this is going to be the case, but we'll wait and see what's happening. We got the Dow up 104 right now. We haven't opened yet, of course. S&P's up 26 or 16, and the Nasdaq's up 26. Crude oil's up $0.50. That's also looking lower. Let's switch over to gold and silver here for a little bit, because I think that these markets in gold and silver are really looking bad. I mean, they've looked bad for quite some time. Now they're really looking bad. So I think that you've got to be really careful here. If you have a bullish position in gold and silver, you had all kinds of good news in the gold to make it go higher. Let me put this up here. We'll take a look at it. And it's got a little bit, this might be a little bit too busy. I don't think it is. Now you can see this good enough. Yeah, this is fine. We're just, this is just terrible how silver looks. Silver is so far under where we were on June 2nd. That was at, wow, it's just looks really horrible. I mean, I don't know how you can possibly be wanting to buy a, we do have a full moon tomorrow, and gold is still held above the 1160, just barely. We're trading at 1170 right now, and after that little, 2-day rally yesterday, that only went to a 382 of the retracement that we had back on June 18th. That's not bullish. Folks, this chart looks bearish. I mean, my gosh, a third grader and my grandson would be sitting on my lap, and he said prices are going lower. They draw pictures, and they know when things are going lower, and they know things when they're going higher. Little kids are at least smart enough to figure that out. I mean, sometimes, I probably should listen to what he has to say, but we're looking at something really, really significant here. Just let me give you an idea of what the ABCD price swing is here on gold. You'll see that it takes it down to about 1050, and let's just put that up here so you folks can take a look at it. And that means that silver is going to go back down to the 1410 level again. And we're not that far away, trading at 15 and change in silver. So this is telling us that we're looking at something pretty sinister, and this means deflation. And this is the one thing that the Federal Reserve, they fear that more than the boogeyman. And, the old dickory dock. So, we got the stocks are going to open really strong today. We got the S&P up 17. The NASDAQ's going to open up 30 after being down 122 yesterday. And we've got the Dow up 115. And, folks, if I was you, I'd be looking for a place to sell a higher opening. That's what I would be watching. But, that's just me. So we'll just see how these markets unfold today. We haven't had any really bad days yet, other than the Dow yesterday. That was the first really bad day we've had of the year, and stocks are down for the year. Not another good sign. So, okay, we'll take a little break here and come back and see how much the talking heads are going to be buying this morning.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and looks like we got the Dow is opening up about a little over 100, it's 112 right now. The Dow, of course, you know, there's 30 stocks in the Dow, and they open them one at a time. So not all the Dow stocks are opening. They don't open them all at once. It's not like the NASDAQ. So that's another factor that you might want to consider. The transportations, they've opened up higher. So we had a pretty much an oversold market. Now, I've been asked to talk about the cycles that I talked about a little bit. The main one that we're watching here, of course, is the one that comes in tomorrow with the full moon. Which, you know, full moon is a 14-day cycle, no big deal. But we have that Jupiter and Venus conjunction. That means they're at 0 degrees. That means they're starting cycles. That's a really a big cycle. That's one of the things that could possibly save the gold market, because Venus is one of the main, well, is the main planet for gold, and it's making conjunction with the planet of finance, which is Jupiter. So that's the one thing that could save gold. In fact, if we took out those old lows that we have down here at the 1165 level and don't go anywhere, then it'll get my interest, because I've got to be at least respecting the fact that we could go busting through those to the downside without any hesitation at all. So just keep that in mind. But one thing that I feel pretty strongly about here is that we're going to see some extreme volatility. We saw the first part of it, yesterday. That was when it really raised its head. I don't believe it had anything to do with Greece and the euro. And the reason for that is the euro rallied 300 pips. And if it was really bad, the euro would have been in the toilet, and it stopped exactly where it should have. So I don't think it was a problem with the euro. That's what they're telling us, but I don't think that's where the problem lies. The problem lies, I think in the debt market. So we'll switch over here. We'll take a look here. I'm going to cover soybeans right after we do the bonds and the notes. And I just wanted to give you a heads up here. We just had a Gartley form here in the Treasury bonds from yesterday when we had the big move. It was absolutely a really nice one here. It's already moved up about 8 pips, not much, but it's better than losing. We'll take a look at it here, and we'll see it. As long as we can stay above, and it's starting to move pretty good now. Yeah, at that 150.03, you'll notice that the high we made in the middle of the night was a perfect 61% retracement at 151.03. We dropped one full handle down to 150.03, which was a 61% retracement. It was the ABCD Gartley, and as long as we stay above that 150 level, it looks like we could have another leg up in the bonds. Whether that has anything to do with the stocks or not really doesn't make a whole lot of difference as near as I can tell. The first shot across the bow here, I believe, was the fact that we gapped down so strongly in the New York Stock Exchange Index yesterday. That really means something because gaps are danger signals. They're to be respected, of course. And when we did that, that's a sign that we're most probably going to go lower. It might stay here for a day or two. We could have just a little what they call a dead cat bounce, and that would be something that could really be important. So right now the market opened higher, and now it's starting to sell off again. So I still, to this day, I don't understand why people are so consumed about buying strength and selling weakness. I think it's a better idea to write your checks to the Chicago Mercantile Exchange and send them in, so you just bypass the commission if you're buying strength. Some people can do it. I'm just not one of them. I have to look at a pattern. I'd prefer to buy on a retracement to keep the risk, a lot smaller than you would normally have. So we'll watch it. So the other thing that could happen today, folks, is we could make a little bit lower low today in stocks from yesterday, and as long as we don't collapse, I mean, if we collapse more than a Dow down 100 points, then then you just you send your checks in, because then it's going to be over. But we could have a little bit of lower low today, and then a 2 or 3 day bounce. And I am not playing this bounce on the long side, folks. My hand is pat. I've got a few positions on to the short side. That's what I want to try to do. Frankly, I've taken the time off to come up and visit Mark, Douglas, and Paula for a day or two, just to get my psychological head screwed on correctly, and because I want to try to take advantage of this to the downside as I see it unfolding. It's done what's necessary to say, hey, the gentlemen, they start your engines, as they would say on the 30th of May in Indianapolis, Indiana, at the Indianapolis 500. The engines have started. The drivers are in the cars. It's just a question of now of when they're going to start doing the laps. We did the first lap yesterday, and we got 250 more laps to go at 2.5 mile ovals. That's to get to the 500 miles, and you'll be headed towards the checkered square at the finish line. But that'll be sometime in October, and I believe will be far, 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 far lower than where we are now. My price objective on this is a 1.618 expansion of the move from February to, basically February to May 18th, when we actually topped. And if you measure that 1.618 expansion, it takes us down about 25% from where we are now. That would give us a total of about a 30% correction. And that would definitely, light up a few trees on Christmas Day for those of us, the few of us that are short, and I'm sure there's more than a few, and maybe we'll get tagged. I don't know. At least it started in the right direction. The Chinese market, dropped 22% in 11 days, and it's rallied back a little bit. And those folks over there are not very accustomed to dropping markets. They expect the government to bail them out, much like some of the folks here thinks the Fed is going to bail us out. And I think they've shot, most of the bullets out of their guns. So my guess is they're going to have a rough time, doing that. That would be what I'm looking at. So stocks continue to sell off after the higher opening, which shouldn't be a surprise to anyone. I mean, buying a market up 120 in the Dow still doesn't seem like it's a very, very, very smart thing to do. Okay, now I wanted to switch over to the note market. And I wanted to show you that one because that's the one that is the largest of them all. It also has been in a protracted bear market, but we've been able to hold that level of 124.20. The Treasury bonds also held that important level at 147. But if you'll notice here on the notes. Yesterday we completed an ABCD pattern up at that 127 level. We've since sold off a point. This market is still bearish. We've just made the first objective. We've had an ABCD rally, which went right to the exact 61% retracement. If you notice on the chart, that came in at 127.03. The high was 127.02. So it was pretty much spot on. Now we're a full handle, under that. So these markets are starting to show signs of weakness. That's the way it looks like from my point of view. If you have any questions, it's 877-927-6648. The bonds are starting to move a little bit higher, which is good. Now, on the gold, let's just check gold here because I just mentioned that I just wanted to show you where we are here in the gold, because we've had this really key cycle coming in here between the first and second. So we're within a day or two, and I just want to bring this gold chart up. There we go. You're going to see here the support that we have we almost got a head and shoulders pattern too. Let's just look at this real quick together so I can do some things here. Okay, you see we made a low back in May. Let's try it. Back on May 1st. At 1168. Then we had another lower low at 1162. That was on June 5th. And now we're here our month out around July 2nd. That's going to mean it's going to be about a 30-day cycle coming in here. And that could be the one that is going to take out those lows. Now, if we look at it from a pure technical basis, you'll see here, and we'll just do this together so that it'll save me a little bit of time, that we could get down to 1150 without any trouble at all. Let's just put this in because this is an hourly chart going back several months, and we can do this easily. Let me put this in because I see it unfolding, and it might do what we think it might do. That would give us a three drive to a bottom pattern here in the gold down around 1142. Now we're trading at 1160.69 now. I mean, we're talking $27. $27 in the gold market's not a lot, so we might make that. That's my ultimate goal here. Gold here is to look at gold down around the 1142 level to tomorrow or Thursday. That would be the ideal. That would be the ideal time to be looking at these things. So that's just what I see from just overall looking at it. Whether that means it's going to do that or not, I don't know, folks. I think gold is heading towards 1,050 minimum, probably closer to 800. These markets are just they're just turning over. All commodity markets are. We've had a little bit of a rally here in wheat and beans and corn, but frankly, it's not been very much, and that's really what I'm watching here. If we break much lower in gold here, we're going to take out the lows of June, and that's going to set us up for the 1142, is what it looks like from the next thing that we're looking at. Hold on one second. I've got to take care of something here. Alrighty, that takes care of the gold market. And see what else we have. Well, let's just look at the New Zealand dollar here, because this had a really nice pattern this morning. Currencies are so much fun to trade. Look. Oh, we did just stop at a 61% retracement of the overnight low in the S&P just now. So that would be the spot if you're going to do anything, is to watch it. But here is a really nice 3-drive pattern here in the New Zealand dollar. We've already had a pretty good move. If you watch this later, you might want to do something with it. But we'll take a look at that, and we'll see. We've rallied about 40 pips off the bottom, but we made a perfect ABCD there in the New Zealand dollar, and had a 3-drive pattern over the last 2 weeks. So that was telling us that we were coming into some pretty good support here in the New Zealand dollar. Now we're going to get back to soybeans, because I know a lot of folks here have been watching beans, which is a good thing. We'll put this up here because we've had one heck of a rally here, and we're having our first correction since $9 a bushel. Let's put this up here, and we'll take a look at it together, and let's just try to come up with a spot today to maybe nibble at these. Maybe nibble at these a little bit later. You notice we went from $8.97 up to $10.01 per bushel. So the 382 retracement of that whole move will bring us down to $9.61. That's 17 cents from where we are right now. So I would, if you have made some really good money in these beans and you're wanting to add some, or you want to get back in after taking profits at the 61% retracement up at 9.96, a good place to look at it would be around 9.62 a bushel. That's a 382 retracement of the whole move in June. Now, there also is the possibility that this is all you're going to get, that maybe that rally was the whole rally for the whole thing. So we'll see. Boy, the stocks have really sold off a lot. I mean, you stop and think the Dow's down 70 points from its high already. That's a pretty big move. So we'll see whether that means anything or not. Okay. Anyway, that's what we're looking at here in the soybeans, and that report comes out at 12 o'clock, and we'll see what's happening. Okay. The next thing I wanted to talk about here is the corn. We covered the wheat, we covered the beans, and we have a corn mark. Boy, those bonds are really running today. Holy moly, guacamole. That's good. Okay, 1 second here. We get the corn up here. We're going to look at Christmas corn, December here, and see where we are. Oh boy, we really this is a corn is telling you that this is the day to pay attention, because we're really looking at an interesting number in corn, and it's really close to where we are now. So corn could literally today say, I'm going to play by myself and gap up, but if it gets much above 412, you could see corn take off and probably run $0.50 a bushel without any trouble at all. But right now what we're doing is we're setting up here 10 days in a row. We haven't even backed off yet, so it's going to be interesting. Okay, we'll be right back after these next words, and we'll see what's happening.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've had a request to walk through the bonds that we were talking about just a little while ago. We've had a big move here, almost a full point coming up on it right now. But basically, if you take a look at this bond chart, it's a 5-minute chart. Most of these big swings that you're seeing, these ABCD swings, they're equivalent to $1,000. That's equivalent to 40 S&P points. 20 S&P points. Sorry, 20 S&P points. So has a lot of volatility here. What we were looking at this morning is you had that ABCD pattern, which is nothing more than the high from early yesterday to today. That measured right down to 150.03. The low was 150.01. We've now rallied 28 points, which is equivalent to about $800 in the bonds. And so the first profit objective on this is right where it's setting right now at 150.29. And if you were in this trade, of course you want to practice money management, you would raise your order up to break even at minimum, and most probably raise it even higher because of this. The power of this move tells you that you're going to be looking at something that could be pretty dramatic. We don't know, so we'll have to just wait and see. Now, the one chart that we've got to really focus on, folks, is the New York Stock Exchange Index chart, because that chart has told us that we are going lower. We gapped down yesterday, and we had a 2% drop in that, first time this year. And I repeat, first time, because there's going to be others. And so we want to watch that, very, very closely as we come into some of these days. Now, we're over some real critical cycles here. We have the Venus Jupiter conjunction, and we have the full moon, and we have a couple other smaller aspects that are out there, but that's the main ones that we're watching. So we would ordinarily expect about a 2-day quiet rally, and the quieter it is, the more bearish it is. To make it bullish, the market has to hold the bottom here and start going up. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.